Hello ladies and gentlemen, and welcome back. In today's video, we discuss something very important, 50% yield inversion, and what that means for markets around the world over the next coming months. We know that August was weak, September has been weaker, and we're moving into October. And what tends to happen in October is sometimes a little bit of a turn. So will the market stop here and find buyers over the next couple of sessions? We'll be looking at the small time frames in today's video, and we'll also talk about the 200 SMA and the potential of a new low coming. Stay tuned, there's a lot to discuss. See you soon. Well, welcome back everybody to the Daily Show where we talk about stocks, commodities, and cryptos. We've got an amazing show today because of course we're discussing the idea of yield inversion and what the bond market is telling us that is to come for stocks over the next coming months. Let's talk about the last 24 hours quickly. Of course, we saw defensives. Healthcare was one of the only best sectors, and the two stocks that made those new lows, Microsoft and Google, held okay for the day. What didn't do well though was Tesla. Tesla fell off, and I believe that unfortunately Tesla is at an extremely high level compared to many other stocks in the market, and the worst may be yet to come. To stay tuned for when we're talking about that. But let's begin by discussing recession warnings. Now, a lot of you know that yes, we're probably already in a recession. They change the wording on it all the time, but let's just talk about it from a bond market perspective. 50% of all yield curves have inverted again, and this is post, of course, the FOMC statement. And what we're finding is that this leads into certain key kind of stats within the markets. The first thing that happens is when we have over 50% of all treasury yields curves inverted, we have some stats that we can bring in for certain asset classes. Take a look at some of these stats. It's not good for some things. Commodities, not so good, is it? Only 0% and 20% of the time were they positive over the next month. This is coming into the worst timeframes, the worst seasonality for commodities. Both realistically commodities and of course metals, that is gold, really do poorly over this time. 20%, 20%, 20%, and it improves a little bit after 1 to 2 months. So be very careful out there on gold and of course commodities in particular when picking your next sector. And nothing actually looks that good here except for usually treasury yield futures, which often do actually end up spiking higher. What about sectors? What happens in the market under the hood? So many retail traders don't consider anything more than the SP500, the Russell 2000, Nasdaq, or Dow. But it's the sectors underneath is where you get superior performance. I talk about this in our group mentoring that we do over at fxevolution.com, and we specifically discuss the idea of rotation. That's how you get superior performance over the medium term. Now, what you'll notice is that when we get these types of yield curve inversions, what happens? The market tends to bunker down, and notice that defensive stocks often do better over that next 1 year or 6 month period. And then all of a sudden, of course, we do see growth stocks start to outperform near the end. The first month to 2 months to 3 months, that's where we have those issues. And usually it's in growth. Growth gets hit first, but also when the recovery is in, of course, it's not about defensive at that point. It's all about taking the risk, and that's what the market tends to do. When we look at some of the macro information models coming out, here's just a bit of an example. You can see that some of the macro information that we've seen so far, when we drop underneath the 0.4 over here on the right-hand side, has led to further declines in the future. In fact, there's only really one period in time where we got a reading like this and the market went up. Look at some of these stats. Again, 1 month, 3 months, 6 months later, very negative on markets, and it's kind of pointing towards that chance of potentially further downside even now in these markets. While we may bounce over the next coming days or even week, what is going to come after that? Should we get a new low? Think about correlation. We'll talk about that soon. We know the Federal Reserve has really showed us a dot plot, and that dot plot basically looked like this. Raise, 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 get to around potentially upwards of 4.75%. Certainly 4.5% is now getting priced in. Keep the interest rates for quite some time, and then begin to cut them potentially at the back end of 2023, even into 2024, with us not really even normalizing until 2025. This is the new expectation. So remember, from the last rate hike to the first rate cut is generally 8 months on average. It's a good stat. And if you haven't been watching the channel, definitely subscribe because we bring these to you, of course, daily. Midterm election years versus other times in September into October. Often we see the turn beginning of October to middle of October. Should we be going bullish? Will it happen like that again? It's going to be very interesting. We're now at the back of September as of the time of this recording. We also know that during bear markets, we usually expect certain pullbacks. This has taken over 200 years of data. Pause the screen if you're interested in having a look at it. We'll talk more about that should we get a new low in the future. And of course, correlation. At the moment, there's no question that we are most correlated to 2008 from a specific standpoint of how the markets moved. When we took these readings, you can see where it was. Now, we've basically completed the 62 example where we've come back down for a double dip. Will we go to a new low? That's the correlation that people are wondering. And of course, people will freak out massively, as will the VIX, as will volatility in general. Should we get below the new lows or the lows that were formed back in June and July? Let's talk about midterm elections. As we know, coming into them, it can be quite weak. Leading out of them, historically strong. Don't forget these stats. It's important to have them in your mind. From the last 24 hours, what was the worst performing market? It was the Russell 2000. They sold off the Russell 2000 almost 2.25%. We saw the SP 500 drop 0.84. And again, what the Nasdaq and Russell leading the drop means is that Wall Street was selling off growth. We saw growth. We saw high risk kind of positions, high PE positions compressing over that time. Here's the last 24 hours of trade. We see financials, healthcare, those types of things. Well, not financials, healthcare and staples and energy and utilities, more defensive sectors up there, losing less money than the rest. And this has been the story of the month so far. If we take all of September so far, healthcare, utilities, staples, while they are down, they are still very defensive in comparison to the rest of the market. Look at semiconductors down here, one of the worst performing sectors. Same with commodities. And we've been early talking about commodities falling off. This is demand destruction. And if you're not sure what that is, it basically means where the Federal Reserve is raising rates so fast and so hard that people don't want to spend money. They get a little bit scared, a little bit fearful. That's their whole plan anyway. And then what happens? Less jobs, less overall construction, all of these types of things occurs, and that leads to demand destruction. There's of course more to that than meets the eye. So what better time for us to talk about the sponsor of today's video, which is Tiger Brokers. And I want to go through one of the platform features that I love, and I think it was probably one of the first platform features that I spoke about when it comes to Tiger Brokers. It's all about sector rotation, guys, and a lot of you know this, but let's just have a look over the last 10 days in the market. This is for the US market. Guess what? The beautiful thing is there's other markets as well they offer it to. That's unique. Singapore, Hong Kong, AU, just to name a few. They're adding more all the time. You know, the thing is that so many brokers don't think about some of these other markets. It's important to us out there, but more importantly, 50 sectors all shown. Now, if you look at the 10-day, it would look like diversification or rotation is ridiculous because, of course, everything's down so hard. But there are some little gems here that aren't down as much. Notably, of course, things like packaged foods, funnily enough, tobacco, defensive sectors. When we go over to the last 5 days of market, you'll notice that all of a sudden we get soft drinks, packaged foods, and tobacco jumping out at us. Other sectors, though, doing very poorly over that time. Semiconductors, anything to do with social media, obviously software or internet, that kind of stuff. These are what we call defensive sectors. And you'll notice that even utilities aren't down as hard. If we go over the last day of change, which you can do live during the market, by the way, and see this, then you can start to see where's the money flow during the day. That's what you're wanting to follow, guys. Every day, the market will love a sector or love an area generally. Sometimes it's a broad market buy. Most of the time, it's like a few areas that they'll be buying. And you can look over the last 24 hours, what were they doing? They were all buying into defensive sectors. And all of these main sectors here were defensive. There was a little bit into some growth, but in general, it was the day of healthcare. And that was what was really moving the market. Healthcare and a few tech stocks that were at those critical lows. So if you're interested, check out Tiger Brokers, link in the description down below for a whole bunch of special offers. And remember, limited time special offer for the AU, for the Australian residents out there. You can get 50 zip stocks along with the other special offers for as little as a 1 cent deposit. It's pretty good. So definitely check it out. Limited till the 30th of September. Let's talk about VIX. VIX is what's confusing so many retailers, traders right now. And this is the one where I guess if you're looking at it, what are you going to do? Do you buy the VIX? Do you sell the VIX? I always work from the idea of the VIX is the fear or greed index. If we hit an extreme low, that is, let's say greed 20, then we might want to look whether the market's at a key resistance or a key supply zone. If we hit a 35 plus, are we at a key fear level? I do expect at some point for us to get back up to a 35 VIX rating. It's generally what happens when markets bottom. If you go back over history, you'll notice most markets bottom with a very high VIX rating. This is not something that we've seen in 2022 so far. In fact, we've barely ever seen the VIX really spike that heavily. Usually near the bottom, you get what we call capitulation, and capitulation equals a really high VIX. At the moment, the theory is that there's so many big traders in cash that they're not necessarily buying protection. I don't really buy into that. I just think that when we're in uncharted territory, the VIX or the fear will rise, and that means that the stock market will be making a new low at the same time. That's when you'll see the VIX really get out of control. Let's take a look at yields, and this is what everyone isn't following enough. Look at these yields. April 2023, 4.645. This was really the big change after the FOMC statement. We saw some of the dot plots showing 4.75% was expected, and also rate hikes faster than the bond market had expected were possible. And you can see here, December 2022, we've got a 4% reading. We've got 4.6 into April 2023. And more importantly, as we push out to September still of 2023, we're still at 4.6. You know what that's showing us? Raising, leaving, hopefully then inflation, or the inflation number comes underneath. And that's when you know we're probably killing inflation. And once in the inflation number, if it does come underneath the yield, that's when everything changes. Now, I wanted to bring this up because everybody is now becoming very aware that the only times we've ever killed inflation is where we've pushed interest rates, that is the federal funds rate, above the core number, above the inflation number. Yes, that's true. But of course, you're not going to push interest rates to 8%. If you do that right now, you will kill everything and everything will explode. Hey, your biggest bear fantasies will play out at that point. The system will break, housing will get collapsed, everything will crush. I hope it doesn't come to that, and I think a lot of you do. I've always talked about the 5 to 5.5% being the straw that breaks the camel's back. If rates have to go above that level, I believe many economies around the world will crack. But what we have to hope for is that inflation comes down and the Fed will keep rates higher for longer to then hopefully quash inflation after it comes through. And I think the pain is being put on the markets right now. This doesn't mean that we've seen the lows on markets, but what it certainly does mean is that if we can now see the data-driven Fed show inflation dropping over the subsequent months, it's going to be a big deal. And you have to be open to both ideas. A lot of you out there in the comment section are going to say, yep, Tom, we haven't seen the stop of inflation. Believe me, it's going higher. I still think that 5 to 5.5% is going to be a massive one. What do you think in the comments down below? Do you think the Fed will have to go higher, or they won't even get to 4.75? Let me know down below. Let's talk about bonds. What are the high yield bonds thinking? Look at this, a new low over the last 24 hours. Now, my lead bond indicators still haven't made new lows. Obviously, high yield has, but my leads haven't when taking into account all the risk parameters of the market. And I guess what we're looking at here is if we see high yields continuously drop, that is, they can keep dropping to new lows, and the stock market's kind of stuffing around at, let's say, a 3750, the chances of a new low forming on the stock market become higher and higher and higher. Don't discount the bonds market. And of course, subscribe, because I will be coming at you if I see the bonds market, in terms of my indicators, go to a new low. I will let you guys know if that does happen. High yield for now, though, and tips have both made new lows. And that's certainly the beginning of worry here from the street. and more importantly from the bond market into everything else. Now, a lot of people are talking about treasuries, and I've been on the record talking about treasuries here. I thought it was an okay risk reward kind of standpoint over there. But a lot of people have been trying to buy treasuries over the last week. I've seen increased discussion about this. I'm not sure if there's others talking about it. I don't think we're at the secondary demand zone yet. So what that means is that we still may see the bonds market go to new highs in terms of their expectations for inflation and everything like that. And if that does happen, what's going to happen to TLT, the 20-year Treasury bond ETF? It may drop into this area. At the moment, it's in the middle of nowhere. It doesn't really have huge amounts of demand here or support. So I think that the TLT could come a little bit lower, but then yes, it will become attractive. What's happening here is that you're having two sides. You had a lot of people bullish on TLT throughout the last year. Specifically, they got very bullish here. Remember, markets like to go into what we call excess. That is maximum pain, maximum hurting all of us as retail traders out there, and pushing everybody, including hedge fund managers, to second guess their decisions. But if you are a believer that we can't push past 5 to 5.5%, let's say we were at 5 or 5.5% interest rates, and we're getting close to that based on what we're seeing on the 2-year and the next 6 months and everything, then this could possibly be the low for TLT. And this is one of those ones where possibly the trade is coming up, and we'll be covering it quite a lot in the future. Let's have a look at the US dollar. What happened there? Well, the US dollar instantly got dropped during the session, and this is all thanks to realistically the yen. And what we saw was intervention. Now, this is the first intervention, I believe, since 1998 or 9. I can't remember which year they did it in now. But 1998 and 1999, the Japanese Bank of Japan, they came in and they intervened in currency. And this is a huge deal. We've got one central bank trying to cause or trying to hold deflation in an inflationary environment. You just know that's never going to work out well in the future. But what it did was it pushed the dollar index round, and now we've seen the DXY make a new low underneath here, then bounce up. For shorters of the US dollar, should you be one of those crazy people, you're looking for it to find weakness around here. Will it do it? Now, if you're long markets, you're thinking that there's going to be buys here in the stock market around this demand level, you also want the DXY to weaken in this area. And there are some reasons why you could argue that around here could be the zone. I'd like to see it spike a new high, come back down, break through here, then pick up and then come down. And if that happens, I'd probably give it the tick of approval to show that yes, it's finding some weakness, at least temporarily, on this chart and time frame. Don't discount though the 110.25 and of course the huge demand for the US dollar down here. You're trying to counter what is currently still a very bullish chart. Let's take a look at the Japanese yen. What are they defending? Well, they're defending their 10-year. We've talked about this a lot. They intervened again and they said, no, we will not let you pass. And they pushed it down. You can see here the big reaction on the 10-year yield in terms of what the Bank of Japan's done. They went into their currency. Look at this. What a huge, massive sell-off that was. And if you get caught in these pegged currencies, you can get brutalized. Be very careful trading manipulated currencies by, of course, the central bank. And you might say, but Tom, the dollar index is manipulated too, man. Yeah, yes, it is, but not like this one in terms of just this huge pressuring onto the currency by the Bank of Japan. They're intervening. This is a dangerous time for trading yen. But if you want to, you're obviously looking at trying to continue now into that downside. I could see it chop city for a while. That is basically go up and down all around. It may be a difficult trade. Let's move over to some other things. We've talked a lot about gold. We know that gold is at the absolute critical zone. In fact, the bottom of this box is weekly a previous low that you saw over here, which was the last level of support. It's now found a doubling equal bottom. If gold drops below this level, which may be worth setting alerts for, there's a real case to be said that gold is going to weaken. And in fact, statistically, seasonally, all sorts of probable readings are pointing towards gold having some weakness here. That's all got to do with realistically, do we have increasing yields? If we think that yields are going up and we still see increase in the 2-year, in the 1 year, in the 3 month, and all sorts of things across the board, that doesn't do well for gold. But coming into seasonal weakness for the next 2 months, will we have new lows? You've got to be very careful around what you do here. And when you go into that smaller time frame, such as the hour, you can just see it's basically accumulating or distributing at this stage. A drop off could be met by serious seller demand, and that would probably coincide with the market falling as well heavily. So gold is doing its best to hold, and actually it's done a very good job over the last 2 days. I'm surprised it's still holding here. Kind of shows you that maybe there's a little bit of buyers coming in to try to hold gold up because we know what's at stake. Look at the volumes that have come through and look at how it's held that tight range. There's a lot of orders that sit in this level, so be careful, trade accordingly. Let's move over to oil. I'm not going to do US oil or UK oil today. I just want to talk about ZOM, which is of course ExxonMobil. I still think this is weak. It looks horrible on the charts. You can see here basically what we call the lightning bolt, the beginning of the downward trend. And this actually came up to a fib of the 78.6 fib. So really that last level, and it's dropped off. When you compare this to oil, the price of oil, it seems like the better short actually is still in oil stocks versus oil itself. And you could really see that demand destruction potentially coming through on some of these oil stocks. Look at it. It went up. Everyone thought the ceiling was like hundreds and hundreds of dollars for a barrel. It fell off. It's recovered, allowing the market to get out of liquidity. Volume is still quite high across the board. And now we're seeing a new low formed here. I don't like what I see for energy moving forward. You may disagree with me. Of course, that's fine. It's just the way that I see it over the next 3 to 6 months. And I bought some stats on this channel over this week. Go back and check them out if you're interested. Let's talk about Tesla. Yes, the weakness continued, and it all happened off our very critical zone. Look, I didn't like this area. I said this many times. I was not bullish up here, and I still don't think I'm that bullish on Tesla. If the market recovers, of course, Tesla will initially recover, allowing potentially more shorts in. But you've got to be very careful around this period. Let's just pull quickly a volume profile over the top of the last bit of price action. So we'll pull it over here. You'll notice we hit the bottoming of that over the last 24 hours. If Tesla's going to find some initial buyers, it should do so around here. And this will be consistent with our analysis we'll do on the S&P 500 soon. We'd love to see a buy and then possibly a sell around this zone. Remember, this has also been a little bit of a key resistance around that 304. So we're at support here on the smaller timeframes for Tesla. Will we see a sell-off caused around 303? That's going to be very critical. And if you're interested in more of how we analyze these sections and how we figure out the ups and downs, you can definitely check out our course over at FX Evolution that we just started launching, which is the Advanced Scalping and Day Trading Masterclass. It's pretty good stuff. Let's have a look at some sectors here. Let's talk about what's going on with XLK. Well, look at that. I mean, if it wasn't for Apple and maybe like Tesla, I seriously think this would be almost on new lows. The technology sector is super weakening. Where's the next level should we fall through? Well, the problem is there's nothing holding it up. If we drop this level here, which was the previous res support, supply demand level, if we drop that, what are we going to do? Come back in down here? This is where people will freak out. Don't forget the 110 though on XLK. Have that on your charts, possibly set alerts for it in the future. Look at the drop that could happen. Significant. I'm actually going to put a little measurement on that. Let's have a look at that measurement. It's about 12% drop off. Yeah, there's not much holding it up after that. Something to think about. Let's have a look at some stocks. We mentioned that Google would probably have an okay day over the next 24 hours. It did. It actually did pretty well. And it was up 0.87 in a down market. At one point, it was up a bit more than that. It dropped underneath here. Obviously, the next 24 hours will be pretty important for it. But if we end up getting a big bearish kind of candle, watch out down below, because the next big levels for Google could be in the mid 80s. And that's going to be a big problem for a lot of people out there. It's kind of critical point here. Microsoft's the same. We've long theorized the idea of going down to a 220. We dropped underneath this level, found some initial buyers at that zone. It took out stop losses that were no doubt underneath here, pushed a little bit bullish. Will it continue? That's going to be to the S&P 500, and we'll talk about that in just a few moments. Meta, another one, 2020 lows, possible level to watch and have a look at. We're getting closer. Apple, absolutely nothing on this one. So much manipulation going on in Apple. There's huge amounts of bears. There's huge amount of bulls. This is an insane stock right now. I mean, it's super expensive still. Yes, it's quality, but geez, I think it's the most shorted big stock now in the markets. It's pretty wild. You can see that the Nasdaq is in the first level where it should find some buyers. If it fails at this level, it goes down to the next level. Where's the next level? Somewhere around that 11,300. So we're basically at the first point that we should find some buyers. And I want to say a big congratulations as well to bears that have been in this market. While you might expect more, really, when we've talked about this on the channel, we've been bearish now for this month. The August, September has played out basically to a T. I want to congratulate you guys because I know many of you out there have messaged me about this. All the way from up here, the targets were always these zones. And it really did hit the level that we'd hoped for. Now, what happens here is going to be very important. The bulls may come in and it may all be over. I seem to think that's unlikely, but of course the trickery leading into this is what's going to be key. Notice that we had a lot of wicks around here. We have that 11,800. Do we bounce into this and then find sellers? Let's have a look at the SP 500. Firstly, here's the S&P, the real market. I just want to mention something a few people will have forgotten about. We do have gaps all over in here. So we've got gaps sitting at the 3,700 zone in the future. We've got one sitting in here because there was an island reversal. I remember because we talked about on the channel right here. Look at the volume that came through on that doji. Whoo, that was big. What a massive, there's Wall Street all over that. They were loving themselves. You could just imagine them, you know, with their lobsters, with their oysters, just like saying, retail's so stupid. Ha ha ha. Look at us. Yeah, that's what they were doing. Now, we are coming back down to those levels potentially, but at the moment, we're in the first level of demand. So let's move over to the futures market, take a look under the hood. Here's all the wicks. Let's go to the 1 hour. Here is the current level. Now, for shorters out there, what are you going to want to do? So a lot of people are going to say, I want to short here. Yeah, hold on, cowboys. I'm not too sure if that's the best level to short. I mean, of course, this is all technical potentials. You've got to make your own decision. But if we look at it on the surface, there's a real case to be made for the market coming back up to an extreme level. Now, a lot of people are going to try to short this support become resistance level. But I could really see the market coming into that 38 kind of 50, or I think 38.60 to 38.80, and having some issues there. For big long-term bulls, you're not able to actually get that bullish until the market does something like this. Then, oh yeah, okay, sure, totally different scenario. Cleaning up these two areas of supply will be a massive thing if it does occur. But for now, what do we expect? Well, we've seen the markets make little tentative new lows. Look at this sneaky little low it happened over the last 24 hours. We get a little low. We're now testing this area. Do we find buyers? I mean, you kind of have to expect somebody to try to buy it up around this level. If it falls through, timber, watch out below. 3,700 probably is the next big zone for this market, if not 36s. So there's some serious issues coming through. I'd like to see buyers come in somewhere around here and commit themselves in the morning. If they do, you'd hope they push it back up. You'll want them to clear this area here, maybe show a little bit of sell-off there to make everybody convinced. And then I'd like to see it push to this level with the bigger sellers hopefully coming in around that zone. We'll see whether that potential happens, and of course we'll follow along. Bitcoin is similar. Notice that Bitcoin made the new low. We still have some sell territory that could be through this level. If we grab again just like a volume profile and take it over the range here, and we'll take it through that range that we've seen recently, you'll notice why it sold potentially this level, but also that this zone in here between this kind of 19.8 and 20,200 is going to be a pretty critical point for Bitcoin. What will it do in here? Will sellers come back? Time will tell. We'll find out over the next 24 hours. But key levels to be watching here in these markets, and certainly very interesting. If you haven't already, come and follow us over at FX Evolution. Of course, remember there is still some bigger news coming from the markets. You'll notice here the Friday, we still have all this PMI data coming out for Euro, for Great British Pound. And we've got the annoying man himself, Papa Powell, coming out to just piss us off on a Friday. 2 p.m. Fed Chair Powell speaks. That's New York time. How annoying. Why is he coming out? Go away, pal. You've already made enough problems for us all, yeah? But we'll see what he wants to do, and maybe that could be the catalyst to either create a big bearish kind of move or a rally. We just don't know at this stage. Big shout out, of course, to the sponsor of today's video, which is Tiger Brokers. If you're from Australia and you're in the audience, remember they have a limited time offer until the end of September, an extra 50 zip shares along with their other little bonuses, and you can get that for as little as 1 cent deposit. Check them out, links in the description. And for anyone else around there in the world, don't worry, there's other special offers down in the link description down below. Subscribe, like the video, and we'll see you in the next one. Bye for now.